Peter Rose, Longwood Currency Trading. What are you afraid of? What are you afraid of getting in the Forex market? What's the problem? This is going to be a kind of a personal vlog. I'm going to walk around and just going to chat with you a little bit as though you were we were doing a consulting session. What's the problem that you're not successful? Why can't you figure this stuff out? Let me see in this video, which could be long or short, I don't know, because it's going to be off the cuff, and just like I'm talking to somebody, because I want to help you. I don't want you to be hesitant about trading currencies. So it's a beautiful early November. I think this will probably go out on the 7th or the 8th video in 2022, November. And we're having a 70-degree day. We had a 70-degree day yesterday. It's just spectacular. But the other day, as you can see, I got the wood pile in on the porch here so that we don't have to run so much through the snow to get wood when the pile is running down. So, shot of the backyard again. Just the other day I did a shot, and the leaves there's still some leaves up there, but there are not very many left anymore. In fact, if you look way in the background there, you can see the tree house up in the woods. I hope you can see the tree house up in the woods. If you can't, there's a tree house up in the woods. Maybe I'll take a walk back there. In talking about the currency market to someone who doesn't understand currencies, what are you going to do? You're going to, I suppose the sun was too bright there, huh? Going to go to stocks. I don't see how you can feel that the stock market is safe. I think if you go to my currency trading page at longwoodcurrencytrading.com and read the 7 reasons why I think that the currency market is superior to all of the other markets, including the market I spent 40 years in, investment real estate, that gives you an idea of why they're better. But it doesn't, I guess it doesn't help your sense of anxiety in risking your money against something that you don't understand. Well, let me tell you something. Just because you watch CNN doesn't mean you understand the stock market. You know, you've got several thousand stocks to choose from. What are you going to do? You're going to invest in the Dow stocks at $60 or $70 a share? Where are you going to get the money to do that? If you want to invest, that's fine. Stick it away, leave it there for 20 or 30 years, and you'll do, over the long run, 8%. But not in the short run. You're not going to trade in and out of stocks every 3 or 4 years trying to time the tops and the bottoms of the market. Nobody's able to do that. Your best deal, if you're afraid of the currency markets, or you don't want to do commodities or whatever, stick your money in a low load index fund, like the Vanguard index fund, and it's averaging about 6%, and it's a huge basket of stocks. There's the treehouse, by the way. Huge basket of stocks that you can not have to worry about. What are you going to do? You're going to put your money in GM or Microsoft. Geez, everybody thought Microsoft was going to be just great. Microsoft, Meta, all of the technology companies down 20%. These major companies that have driven our economy for decades. And that's safe. I don't know. Currency markets, several weeks ago when I was on a flight with my wife to out to Chicago, I told you about a trade that I made in the Baltimore airport during a layover for a transfer flight. It was about 10 minutes before the flight was boarding, and I was looking at the market on my phone. I don't trade on my phone, but I check it. I wasn't in the market at the time because I was on vacation, and man, it was just going crazy. it was reacting dramatically to world events that were occurring that time, and I had to go in. So I went in heavy, I shut her down, got on the plane. 2 hours later, I landed, and I was $900 up. And it could have gone the other way. It could have been $8,000 down. But based on my knowledge of what's going on and having a simple way of judging what to do, I felt confident. And if I would have lost, I've got the skill to make that money back and continue on ahead. That's what I teach. Not to be afraid of loss, because you can make it back. And the only thing you have control over is the amount of money that you lose. And so you determine what your pain threshold is, and when it's reached, get out, and then you work for 8 or 10 days to make that money back, or 3 months, or whatever it's going to take you to do. I mean, granted, this stuff is easier or simpler when you have a larger account, because you can make the dollars back on the same small pip value, whereas if you're dealing with a small account and you lose 20% of your account, it's going to take you a long time, you know, to make that 20% back, when you can't at some point back up the truck and go in really heavy and make those dollars up. I mean, that's a whole topic in and of itself. But why would you get your bowels in an uproar over the currency market and your hesitancy in getting into the currency market because of all the things that could happen that are bad? You know, you could wake up in the morning and step over the side of your bed and forget that your slippers are there and twist an ankle. Life is filled with risks. You have to learn how to mitigate the risks. That's what I teach. How do you mitigate the risks up front so you don't have to worry about the risk? Everybody out there is teaching all this stuff about risk and do this and do that. You eliminate it. And then when you have no fear of loss, you can have a tremendous appetite for gain. I had to come in and get a cup of coffee. It's morning, so I gotta have my coffee. We're talking about risk and stuff. Although risk can be at the forefront of your mind and a key aspect of your, your win to loss ratio and your trading plan and all that other stuff, if you solve those issues up front, then you don't have to worry about it. It's like building a house. You know, the whole premise of the whole house is based on the foundation. If you get a bad foundation, the house is going to crumble, no matter how nice the house is, right? And so once the foundation is set, you don't think about that anymore, because you made the plans to support the house that you're going to build. That's why the trading plan is so important. And when I work with somebody, the emphasis is on trying to determine, to help them, what's your ultimate goal? What are you trying to do? What kind of house are you trying to build? And that's the foundation that we're going to lay for you. Now, the foundation is the same no matter what you're going to do. However, the material that you're presented in building that foundation is based on where you're trying to get to from a dollar value. And so those are problems that you solve up front. Now, the depth and the extent of that foundation, again, is going to be based on where you want to get to. If you want to make 10 or 20,000 bucks a year, then that foundation is going to support that particular type of house and then some. But if you're looking to make $100,000 or $200,000, replacing your job income and doing that strictly as an income, knowing that you're going to lose money during that period, but you still need to be able to draw out an income even though your account balance may drop, $100,000, $200,000 a year, that should be able to do that for you as a goal. Well, then there are some seeds that need to be planted early on in that risk management trading, so that you can, when you increase the size of your account and you enter into areas of more involved trading tactics, then the risk management needs to roll over with those goals. Here's for example, here's some risk management stuff that I was generally working on. It's just very basic, simple, easy stuff. But I still go over it to make sure that in the heat of battle, I do the right thing. And so the issue becomes, when you're looking at this Forex thing, how do I learn all this stuff? What do I do? How do I manage all of this information? The problem with trying to learn this stuff through a book alone is that it's like trying to learn a foreign language by reading a dictionary. And the people that write the books tend to think you need to know what a pip is, or how to draw moving average lines, or what Bollinger Bands are, all this really crappy stuff to show how bright they are and everything. But it doesn't get to the heart of how to trade. It tells you what to do, tells you how to use a moving average line, but it really doesn't incorporate all that stuff in a logical manner so that you can see how this stuff is going to be used to protect you. A good educator is going to have at the forefront of their mind how you're going to protect yourself. A really good educator is going to say, let me take that and take care of that up front really well. Let me resolve those issues of risk management, so that when I'm working with that person who's a knowledgeable and semi-experienced trader, I can show them how to maximize their profits. You can't learn how to maximize your profits and replace your job income if you're scared about losing $500. You just can't. I get this all the time in emails. Oh, I'm not sure that I want to trade currencies, and I'm going to go read a book, and I'll come back to you and I'll ask you some questions and stuff. You just can't do it that way. You have to step back from it. That's what I try to do with the folks that I talk with. Step back from this thing. It's not complex. Well, it is complex in its implementation of a almost $7 trillion business, daily business, not yearly, $6.6 trillion in 2022. That dwarfs all of the stock markets combined on a daily basis. Dwarfs them. And so don't you see that provides you the security and the stability and the safety that you need? Why would you bet on the outcome of an individual stock? Oh, because I look at CNBC and, Apple is, 2% a day. Or Bob's, laundromat empire is up 3% a day. Well, yeah, but they can also be down 10%. We can also find out that Bob's been skimming the till, and the whole business is a fraud. You can also find out that 4 of Bob's locations are on toxic waste sites. You can also find out that Bob's been mistreating his employees, and they have a class action suit against him. What's that going to do to the value of the stock, and how are you going to know about that ahead of time? We look at the currency market, it's like a big ship. Do you turn a big ship right away? No. It takes a long time to turn that ship. And in the currency market, it's the same way. So if you're trying to think, I'm reading the news and I see this happening, but the opposite happens. No, the opposite doesn't happen. It's because you expected such a big move in one direction and it didn't do that. It's still going in where it's going. You think that that's somebody's fading the market. In the currency markets, it's based on order flow. Big corporations are trying to do business internationally, and they need to buy the other person's currency and sell their currency in order to transact business with that other country. And the other country's taking the other side of that. They're selling their currency and buying the other person's currency. And so you get this big exchange. What's there to be afraid of that? Oh, there's no regulation? Well, no. There's no regulation for restaurants serving food, but you're not going to get that big of a difference if you go to a family-style restaurant in Kansas and you go to a family-style restaurant in, I don't know, Winter Haven, Florida. Prices are not going to be that much different. The food's not going to be that much different because you have all of these restaurants vying for your dollar. And so they want the best food at the best price. And that's what the currency market is, except it's like a bazillion times bigger. So why wouldn't you want to go into an environment where the deck is stacked more in your favor than it is in any other market? You know, in the commodity markets, as big and as appealing as they seem to be, you know, you're trading wheat or Brent crude or some of the financial futures or corn or something like that, you think, well, that's really safe because, you know, the price of sugar is determined by Aunt Betty, who goes down to the market and says, oh, I'm not going to buy that sugar, it's too expensive. And that kind of trickles through everything. And that all makes great sense. Except when a rumor hits the trading arena and the brokers go crazy and the price starts to really move and take off, the exchange shuts it down. It's called a lockdown, right? And it means that nobody can trade that particular. Let me turn my phone. Right. Okay. Sorry about that. That was my alarm that I got something to do. But the exchanges will lock that price down, and you can't trade it. You can't get out of it. You can't get into it to take advantage of it. You're stuck. And it doesn't open up for a certain period of time. And if the exchange feels there's too much uncertainty and volatility, they'll leave it where it is. And you can get stuck for 3, 4, or more lock limit days. You can lose $300,000, $400,000, $500,000. You lose your house because when the bill comes due for that, you might only be trading a $25,000 account, but you could get stuck for $500,000 if you get caught, and you got to pay it. And you know, I'm not willing to take that chance. There are no lock limits in the currency markets. They're too big. There's always a buyer, there's always a seller. Well, I mean, if you're trading some Tibetan currency against Mongol, I don't know, some smaller currency, Thailand or something, yeah, you're going to get tremendous volatility and it's just going to tear you up. But if you work the major pairs, there's no lock limits. There's plenty of ability to absorb those orders. You're going to get filled. There is a rare situation where, you know, maybe you will get caught. But if you're there watching the thing, oh man, it should have took my order out. It didn't. Boom, hit the button and take it there because the order flow is stabilizing itself. Yes, you'll lose perhaps a lot of money, but you won't lose it all. You have to really understand the workings of these markets in order to determine which one you feel comfortable with. But so often I talk with folks that the best they can come up with is a few $1,000s to learn how to trade, or maybe they've got enough to when I figure it out, I've got $20,000 or $30,000 I can put into it, but I don't want to risk that amount of money, and I'm losing all this money at the $2,000 or $3,000 level, and so it must be a crazy market. It's not a crazy market. You just don't know how to trade. So the opportunity is there for you, quote, if you know what you're doing. The question now becomes, how difficult is it to know what you're doing? It is extremely difficult if you're going to try it on your own. I'm a pretty bright guy. I got a bachelor's in physics, almost a minor in math, 33-year career as a software engineer designing internet-based business applications, 40 years in real estate investment that enabled me to retire. Been 50 years in the martial arts, and I'm listening to all this stuff that's out there and trying to take all this advice and do all this stuff. I traded in a simulated market for 4 years because I really wasn't doing it to learn how to trade. I was doing it as an academic exercise for many, many, many years. So I had all the information in the world, but I had bad information on how to trade. And so when I got in there, I lost $40,000, and I just, holy crap, this isn't the way it was supposed to happen. And so I backed up from it, and I said, let's look at this logically. What's the problem here? Oh, this is the problem. Oh, these are the things that I probably ought to be looking at. And I had $5,000 left in my account, and I doubled that in about 4.5 months. It's simple. It's not easy, but it's simple. The thing that makes it easy is if you have a plan that you can follow that makes sense. Most educators tell you to do a trading plan, and that's a big thing with me. You got to do the trading plan. That's what you start with, but that has nothing to do with how you implement your trading plan. How you implement it is a totally different thing. The trading plan tells you what to do, but it doesn't show you how to incorporate all that stuff. It can't. You know, if you want an example of that, pick up one of Al Brooks's books and read that. And he's following, particularly his scalping. Well, this bar is about this big, and this bar is about that big, and because of the blah, 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 and so I did a short, and there it is, and I got 3 pips. And all of the stuff, it takes, 4 pages to describe that one little thing. And then 50 pages later, there's a similar situation there, but he doesn't talk about that. He talks about something else. It's very difficult to pull any information out of that. Again, it's like trying to learn a foreign language by reading a dictionary. So the only thing I can tell you is that if you don't have an education that's based on problem solving, and I'm not talking about researching historical figures and trying to figure out why they did the policies that they did. I'm talking about abstract research that you would find in physics, math, chemistry. If you're a writer, you're trying to unscramble plot lines and stuff like that. If you're a plumber, you got to visualize how all this stuff goes together. You got to have that visual ability in order to look at the big picture to figure out what needs to be done. If you don't have that ability, then you probably shouldn't be trading, you shouldn't be investing or anything, because it's all based on that, but particularly in currencies. And so when someone is asking me if I'm going to mentor them, they have to go through a review process before I'll work with anybody. And that's to filter people out that aren't going to be successful anyway, and I don't want to be at the other end of that saying, oh, I'm not successful because of you. No, you're not successful because of you, and you didn't listen to what I should have said. I'm not going to get involved in those conversations because I don't need your money for consulting. I don't need your money for courses. I don't want it. I don't want 200 people emailing me every day about what a Bollinger Band is or all that other shit. I'm dealing with a specific group of people that are serious about their trading, want to learn the process of trading, not just trading, but the process of trading, and they're going to seriously go about investigating what I have to say. You know, I talked to one of my former students the other day who never got into a real account. He just didn't have the time. You know, the guy's 50 years old, and he didn't have the time. He works a hard job, and I was telling him about how I had done. I said, oh, you know, in October I had my third $30,000 month, and the other day I closed my largest single position for $15,000. I'm doing really well. I don't do that every month or, you know, whatever. But those are hallmarks. And he just shook his head and he goes, "Man, I wish I would have stuck with it. I could have been doing what you're doing, and maybe not with the bank size that I have, but he could have probably been doing enough to replace a third to a half of his income." And so what he's going to do, I don't know. But that's not a position that you want to be in. If you're young, you got plenty of time to make mistakes. And mistakes are encouraged. You don't learn from when you win. You only think that you're a hero. You learn from your mistakes. So let's manage the mistakes and maximize the learning process that comes out of it. That's process-oriented trading. That's what I teach. But you don't need to learn from me. You can do that on your own if you stop listening to all these idiots out there and just look at the problem that needs to be solved. What's the main thing you need to solve? It's your fear of the market. Well, what do you have control over to manage that fear? You have a stop loss. So when you enter a trade, don't let it run 30 pips before you stop yourself out, or 20 pips. Why? Put your stop at 8 pips. Put it at 10 pips. And fail a lot. Because as Jesse Livermore said, once you figure out what not to do, you know what to do. Now, you can do that in an efficient manner. You can't just, it's like playing poker. You can't just throw your ante in and lose the ante and play a couple of hands, and you're not going to learn poker that way. You have to have somebody to guide you through the probability analysis of the hands and where you're going to go. The problem with poker is not only do you have a probability analysis of the hands, but you have the cheating bastards that are lying to you all around the table. Look, I played poker a long time ago. I played a lot of poker. I was playing poker for a week's salary. That's what I was putting up as a thing. So all you guys out there that are playing poker that think you're heroes because you're nickel dime or dollar quarter or quarter dollar, I'm sorry, but I'm playing with a week's salary. So I think I know a little bit about the differential between playing poker and those concerns as opposed to trading currencies. You need to be able to logically look at what the problem is and to break that problem into pieces that you can then solve, which is what I did using my software engineering degree. And what my course is laid out to do is to solve the 3 phases of the life cycle of a currency position: entry analysis, position management, and exit methodology. And each one of those phases has its own little problem domain, what you're trying to do, and several rules around it that eventually they're simple enough so that you don't go, okay, like a pilot on a checklist. I did, 1.1.42 and I did 1.1.43, and it isn't like that. You look at the thing and you go, oh, there's no trade there. That's how simple it is. And I do that. I come in the morning, I got my cup of coffee. I look at the trading desk. There's nothing to trade there. I go about doing my business, answering emails, and doing whatever other I need to do. If there's a trade, I'll watch it. I'll get my ideas for the trade together. I'll wait for it. And when it happens, I go in, I work with it and manage it, and I want to be out. Because I don't want to be trading more than 2 hours a day. I got other stuff to do. And by doing that, and many times, when you work that trade correctly and it goes into profit for you, you're going to want to let that trade run overnight. So there are ways that you manage that trade while you sleep. But you have nothing to lose except the distance between wherever the current price is and your trailing stop. But that's nothing. If you're 40 or 50 pips up and the price goes 60 pips and then comes back and you trail your stop 10 pips, you just lose 10 pips. Well, so what? You've made 50. So many times I'll do a carry trade like that. And then I'll come out and say, well, that position made $4,000. Well, that's great, but it took 3 days to do that, right? Or 4 days to do it. I made $4,000. It took me 4 days to do it, so I made $400 a day. Is the $400 divided by the amount of money that I had at risk a reasonable percentage gain? And usually it comes out pretty close to that, which means I really shouldn't be doing those carry trades. I should just bang it away on my day trading and go flat at the end of the day and don't worry about those big gains, because though they tend to pay a lot of money, once you divide them by the number of days that you've traded and subtract off your carry interest, if you're having a negative carry interest, then it turns out that you could have done better if you just didn't trade, except on the days where you could make a couple of big hits and you'd be fine. And you wouldn't have to be sweating carrying the trade overnight. What are you afraid of? There's solutions to all these problems, but when you look at the whole thing as a big mass, you don't see that. All you see is the woods, and you hyperventilate about all the tigers and lions and bears, oh my, in the woods. Look at stuff in a reasonable manner. If you have any questions, feel free to send me an email. I'll try to help you out. There's just so much I can do in an email correspondence, and there's just so much time I can spend at that because I obviously have so many people contacting me. And I only work with a few because I want you to be a success. And if you're not going to listen to me or follow my directions, you're going to try to argue with me about everything, I'm not going to take you on as a student. I don't care how much money you pay me. I don't need your money. I'm sorry I'm being facetious. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.